Hello, and thanks for watching. This video is to take a quick look at the US economy as it stands today. Is Donald Trump right when he says the economy is stronger than ever? Or are the gloom and doom analysts right when they say we're on the verge of another crash? Trump was quick to point out the low unemployment numbers, the markets significantly up from a year ago. We had the big peak in January, but even since then it's still up. These people predicting the crash are primarily looking at the yield curve, the 10-year over the 2-year Treasury yield interest rate. As you can see, it's been flattening as a result of quantitative tightening by the Fed. Look at the daily rates from the beginning of this year, 2-year versus 10-year, about 0.5% difference. Today, it's shrunk in half from that last size. What does that mean historically? Look here in the past when it's flattened or inverted actually. We had the dot-com crash, we had the financial crash, and it looks like we're heading towards a possible inversion now. Even Donald Trump lately has expressed his concern about this to the Fed. Of course, the Fed operates on its own, regardless of what Trump or any president says. But let's take a look at something else. Corporate consolidation right here, REIT consolidation. It's real estate. This year already compared to last year, $10 billion more in mergers and acquisitions. There's been a lot of big name ones happening. AT&T and Time Warner, Keurig and Dr. Pepper. Anyone who knows the free market principles can tell you that is not good for competition. Let's go back to the stock market. FANG, Facebook, Apple, Amazon, Netflix, and Google. You look at it here versus the S&P index. Netflix and Amazon especially far outpacing the rest of the stock market. And I finally heard just the other day someone on Fox Business bringing this up, that outside of these FANG stocks, the market has been relatively flat since January. And of course, as we know, aside from NASDAQ, but even then still, it's been very up and down. The Dow Jones up and down, flat. But this is what I really want to look at in terms of what the economy is like today. Look at this. Income today versus 2000, which was a strong surplus year. $500 worth of growth. All this quantitative easing, inflation, income's gone up $500. You look at the new housing prices, it's doubled. You look at home sales just these past few years. In 4 years, it's gone up about $50,000. Mortgage debt, $15 trillion right now. Where was mortgage debt at the time of the housing bubble? Oh, look at that, $14.5 trillion. You look at it at 2004, 2000, and then today, $15 trillion in mortgage debt. Income stagnant, US workforce stagnant. People on benefits versus people in the workforce. Ridiculous. I'm not saying the economy is about to crash. I'm not predicting one. People have always been predicting one. Last year, people were sure it was going to crash. What happened? The market rose to extraordinary new heights. Missed out on a fantastic bull run. But it is fragile. Debt continues to go up and up and up. Wages have been stagnant. What do you guys think? Let me know down below.